Welcome back to Barry Charles, your one-stop shop for everything finance. On this episode, we're going to talk about Accenture Place. Yes, your one-stop shop for everything business and accounting needs. Can this stock continue to outperform, or is it time to maybe look at investing? Well, let's have a look at Accenture Place right here, right now, and see if this is a potential buy or sell for you if you're invested in this company already. If you're looking to invest, we're going to do a stock analysis looking at revenue, net profit, earnings per share, the PE ratio, dividend yield, total assets versus total liabilities, free cash flow, return on invested capital, and so much more. And if you stay right to the end of the video, I will give you the potential intrinsic value of Accenture Place. Remember to like and subscribe if you liked the video, and let's get to it. Accenture Place stock analysis. Welcome back, guys and gals, to the channel. Let's have a look at Accenture Place. Revenue in 2022 of 61.5 billion through to 2023 of 64.1 billion. So a nice rise there. Net profit has stayed around the same at 6.8 billion, so that's not the greatest. Earnings per share 12.22, so that's not bad. PE ratio 30, so they are growing. 52 week range 242 to 375, so it's very near highs at the moment. Dividend yield of 1.39%, with the dividend paid over the year of $5.16. So not much of a dividend there, so nothing much to worry about. Short interest is like virtually nothing, of 1.1%. So they, according to the market, they are not going to collapse altogether. The market cap of this company is 232 billion. Total assets of 47 billion, up to 51 billion in 2024. And with total liabilities, it's staying around the same with 24 billion. It's an outstanding double up on assets compared to liabilities, so that's what we like to see. Long-term debt, this is pretty low at 45 million, down to 43 million, but the free cash flow of this company has really reduced from 8.9 billion to 429 million. So it's a big payout there for Accenture there. Hopefully you'll see that bounce back going into 2024. Shares outstanding 626 million, and that for shareholders, so not too bad. Return on invested capital 20%, folks. Yes, 20% return on invested capital. That's very nice, very exciting. If we look at the 1 year range and the 5 year range in terms of the percentage, so in the last year it's gone up 26%, and over the last 5 years 138%. So if you bought it around 5 years ago, congratulations to you. But if you're still in it now, wondering if you should sell or was it potential to buy, well, that's what we're here for. Accenture Place, the business model, accounting, I can see the potential for it to continue to go well. It's a need-based business. We'll always need customers. Whether they can be mega growth, that is probably the biggest question mark, and they may become more of a slow grower over time. But there's potential for still more growth, but it's not as big as it once was. So there's probably a question mark. You have to decide if it can continue to grow. But we're going to do a bit of a little intrinsic value test on it right here, right now, to see where Accenture Place is right here, right now. See if it's worth your investment potentially or not. Not financial advice. Do your own research before you invest into any stock. But yes, let's have a look at the intrinsic value of Accenture Place. So I use the TradeBrains calculator for this, which is a basic calculator that you can find on. If you just put TradeBrains grams calculator into Google, you will find the TradeBrains calculator, which basically does the current share price with the earnings per share, with the growth rate, the current bond yield, and it gives you the potential intrinsic value at any point. So the current share price is $370. Earnings per share at 12.22, with a growth rate of 5%, at the current bond yield. The stock is overvalued at 235. Now, if you think the stock is going to grow 10% for end time, you're looking at fair value roughly at 363. Now, we think the earnings per share is going to grow over time. It's going to go to 18 and stable for current 10% growth rate, which is not even quite at 10% at the moment. And then you're looking at $534 stock. So if you can think this company can continue to do it, there's potential to at least make you some money, but it won't be a world beater. If you think this company's going to double its earnings per share from here and go to 15%, then you're looking at a stock value of $963. So if you think that's the future of this company, then good on you and good luck to you. But I don't see that happening. But I do see 10% potential with the earnings per share. So potential bargain, but I don't see it being a multi-bagger. So I'm staying well away from this. But if you're looking for a nice, slow sort of SP 500 sort of investment, there's no doubt that I think this company is doing well and potential to continue to do well. But for me, I just don't see it as much of a big turnaround player for me to even look at investing into this company. Question mark for you is, where do you see it going? Can you see this company blowing out of the park somehow? Then maybe this is a stock that can really go flying. But I don't see it where it currently is. If you're going to grow revenues of around 5%, it's not good enough for it to be a big growth investment opportunity for you out there. But anyway, that is the Barry Charles for this episode. We've done a stock analysis intrinsic value on Accenture Place. I hope you got a lot out of it. Remember to like and subscribe to the channel, and I'll be back here each and every week with another video like this 3 times a week. Have a great day out there, and I will see you very, very soon on the channel. Bye-bye.